Hey, welcome back. It's Jason Walter here. According to a new report from the Mortgage Bankers Association, or the MBA, the total number of people submitting loan applications actually increased for the week ending July 29th. This is quite the turnaround because we have been seeing a decrease in people submitting loan applications due to high mortgage rates. So this is the topic of today's video. I'm going to take a deep dive into this for you guys. Hope you guys enjoy today's video. And of course, if you do, please hit the like button. I really appreciate that. So with that said, let's go ahead and dive right in. This again is according to the Mortgage Bankers Association. They just announced this report here on the 3rd, which is today at the time of this video. So mortgage applications increased 1.2% from 1 week earlier. And again, this is for the week ending July 29th. And the MBA has an index based on people submitting loan applications for refis and also for purchases. So the refi index actually increased 2% from the previous week, but we're still down 82% compared to the same week 1 year ago. This, of course, because of rising mortgage rates, of course. The unadjusted purchase index actually increased 1% compared with the previous week, but we're still down 16% from 1 year ago. Now, here's something I want to squash right away. This is only 1 week of data. In other words, we can't make long-term projections based on a single week of data, right? And also the number of people submitting loan applications only increased by 1% from 1 week ago. And as you guys may recall, I made a separate video 1 week ago when the MBA released last week's a report for applications. That was announced on the 27th, and that was for the week ending July 22nd. And to refresh your guys' memory, if you guys are a subscriber here, mortgage applications declined for the 4th consecutive week to the lowest level of activity since February 2000. That was last week's report. Mortgage applications, or total mortgage applications, which of course includes purchases plus refis, are at the lowest level since February 2000. So what I'm getting at here is just because we're seeing more people submitting loan applications for home purchases, an increase by 1% from the previous week, we shouldn't be making long-term projections based on this. And here's what I mean by this. Here's our purchase index ever since this pandemic hit. Obviously, during the pandemic, or the early parts of this pandemic in April and also in early parts of May in 2020, we had a big decrease in the amount of people submitting applications for home purchases. Then, of course, we had 2021 and 2022, where we had a lot of home buying demand, and that caused home prices to increase greatly. But really, ever since the end of January, this index, which again is based on the number of people submitting applications for home purchases, has been decreasing. And according to Joel Kahn, who's one of the associate vice presidents at the MBA, he stated here that mortgage rates declined last week, and that was after the Fed announced they raised rates by 75 basis points, the federal funds rate, not mortgage rates. And also this decrease in mortgage rates was caused from Treasury yields decreasing last week. And because Treasury yields dropped last week, the average 30-year fixed rate mortgage saw the largest weekly decline since 2000. And you can see this decrease in the Treasury yield right here. So the yield on the 10-year Treasury has been basically decreasing ever since the 20th of July. And because this yield has been decreasing, so have mortgage rates. But there's actually been some new developments regarding this because that was last week. Here's what's happening this week. So really ever since yesterday, which was the 2nd of August, the yield has been increasing, and that caused mortgage rates to increase greatly yesterday. Also at the time of this video, which is the 3rd in the morning hours, the yield has increased by 3 basis points so far. And because the yield has been increasing over the past couple of days, so have mortgage rates. So according to the Mortgage News Daily as of today, which again is the 3rd, the average 30-year fix is at 5.50%. Now, this is quite the turnaround because 2 days ago, the average 30-year fix was 5.05% on the 1st. But for the past couple of days, mortgage rates have increased about 45 basis points. And also, as you guys may recall, from July 28th until August 1st, mortgage rates actually decreased by 50 basis points. So in other words, mortgage rates have been very volatile over the past week. So what I'm getting at here, big picture, is yes, we did have an increase in mortgage applications last week, but this is when average mortgage rates were fluctuating in the range of in the low fives. Now they're at 5.5% and have been increasing greatly over the past couple of days. So let's not make long-term projections based on short-term data. All right, so going back to this original report from the MBA, the drop-in rates, which again was last week, that led to increases in both refi and purchase applications. But of course, compared to 1 year ago, activity still is depressed. And it says here, lower mortgage rates combined with signs of more inventory coming to the market could lead to a rebound in purchase activity. I want to mention a couple things regarding this. So they say we're seeing signs of more inventory coming to the market. What I read by that is that they're saying we're seeing more new listings hitting the market. But when you actually look at the latest trends, at least according to Redfin, for example, look at this. New listings are actually down 6.3% compared to 1 year ago, and have been decreasing really ever since June of this year. So they're basically at lower levels compared to last year and moving downwards. So we're not seeing this increase of more inventory coming into the market. What we are seeing, though, is a pullback in home buying demand overall over the past few months here, and that's causing an increase of active listings or inventory. So again, we're not seeing this giant increase of new listings coming into the market here. We're actually seeing just the opposite. We're seeing less new listings hitting the market, but we are seeing an increase of housing supply. So right now, for the 4 weeks ending July 24th, housing supply is actually up 3.83% compared to the same time period in 2021. So because we have more houses listed for sale right now compared to 1 year ago, obviously this is good news for home buyers. One thing I want to mention though, and I've been talking about this on the channel quite a bit though, is that yes, we have more options. We're seeing price reductions. We're seeing not as much competition for houses that do get listed for sale. But take a look at this because home prices across the United States are still very high, at least historically speaking. So yes, home buyers have more options, but home prices are still very high. So according to Redfin, home prices right now are up 9% compared to the same time period in 2021. The median sold price is $385,000. Compare this to the peak, home prices were at $396,000. So in other words, we really don't have a lot to celebrate given the fact that home prices have decreased by about $11,000 over the past month. And especially given the fact that home prices in 2019 were $276,000, now they're $385,000. All right, let's go back to this original report here. Obviously, we're seeing more inventory. I wouldn't say coming to the market, but we are seeing more active listings, and this could lead to a rebound in purchase activity. A key word there, could, of course, right? I could see actually this potentially happening because mortgage rates have been basically plateauing over the past month or so, or they actually have decreased from 6.3% in the middle of June. Now they're down to 5.5%. And because housing supply has been increasing, of course, it gives more home buyers more options. So we could see a rebound in purchase activity, but we're not seeing that just yet. And of course, I support my claims with data. Go figure. So here's pending home sales according to Redfin. So pendings are actually down 15.18% from the same time period in 2021. It has been plateauing more or less over the past few weeks here, but still far below 2021's levels. So with more houses listed for sale right now and also mortgage rates down compared to the highs we saw in the middle of June, of course that could cause an increase of home buying demand, but the stats do not reflect that just yet. And meanwhile, according to the MBA, the adjustable rate mortgage or ARM share of mortgage activity actually decreased to 8.4% of total applications. Again, this is approximately almost 3 times the share compared to January of this year, but much less compared to the year-to-date highs of around 12% that I believe were set about a month or two ago. And the average contract interest rate for a 30-year fixed-rate mortgage with conforming loan balances, that means loan balances of less than $647,000, actually decreased to 5.43% from 5.74%. Also, FHA decreased to 5.39%. That's down from 5.54% from 1 week ago. And the average rate for a 15-year mortgage decreased to 4.74%. And by the way, this survey here by the MBA has been in place on a weekly basis ever since 1990. It also covers over 75% of all U.S. residential mortgage applications. So comment below what your biggest takeaways from today's video. Also, I want to hear from you guys. Do you think that mortgage rates of around 5.5%, a big decrease compared to mid-June of this year, is that going to cause home buying demand to increase? I'd love to hear from you guys. Comment below. Also, if you guys got any value out of today's video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day and look forward to seeing you on the next video.